Welcome to the Patrick Real Estate Show, where we explore the fascinating world of real estate investing with your host, Patrick Switek. Patrick is a dynamic young entrepreneur and an accomplished real estate investor who's passionate about helping others achieve financial freedom. Each week, we sit down with some of the most inspiring individuals in the real estate industry and delve into their personal journeys, lessons learned, and secrets to their success. Let's dive into this week's episode.
Hey, Jamie Lane, welcome to the Patrick Real Estate Show. For the people that don't know, Jamie is honestly one of the biggest people when it comes to analytics and data in this space. Not only is he the senior vice president of AirDNA, or analytics at AirDNA, but he's also very involved in the industry. He speaks on stages. He talks all things data. What are things happening from a macro and macro usually level, and how does that impact short-term rental investors specifically? So I'm really excited to get him on the show and just really talk through everything. He seems to be a breath of knowledge. And without further ado, welcome to the show, man.
Hey, thanks for having me. Excited to be here.
Yeah, absolutely. Jamie, before you get into all the fun data stuff that I know you like to geek out on, what's your background? Like, how did you get into all this, just real quick?
Take it way back and got into hospitality, interested in this sort of stuff, couch surfing around the world back in 2008, 2009, pre-Airbnb. And then 2010, I started as an economist in the hotel industry, a small company called PKF Hospitality Research. Switched from hosting on Couchsurfing to hosting on Airbnb in 2012. And then I progressed my way through PKF and then CBRE and managing a team of economists looking at the entire commercial real estate industry. Became a client of AirDNA in 2015, actually bringing that data into the hotel industry and pretty much like figure out who's eating your lunch and figure out how to compete. And then just got really interested in the data and the growing sector and joined AirDNA full-time in 2020.
Wow. So 2020 is what made you want to join AirDNA out of all things?
Yeah, big thing for me, just like the sector change from hotels to short-term rentals. Hotel growth was like 1 or 2% a year. And I looked at the short-term rental data, it was growing like 10 to 20% a year. So if you're just like thinking about like how a sector's changing and the opportunity to build something, like it was really in the short-term rental sector versus hotels. And looking at AirDNA, like they were a company I had worked with for a long time in the past. I was comfortable with their data set. I had built myself as an expert around their data in the hotel industry. And their CEO, Scott Shafford, gave me a call and he's, Jamie, this data better than anyone inside our own company. Will you please come work here? And it took him a couple of years to convince me, but eventually we made it work.
Aren't you glad that you used data to make that decision too, which kind of is on brand?
Yeah.
So going off of that question, what's the trajectory now in terms of short-term rentals? I know there was obviously a dip after COVID versus during COVID, or maybe de-acceleration.
Yep.
More, but I'm just curious, like, what's your take on what's happening right now?
Yeah, so and we're definitely seeing a deceleration now. So like during COVID, supply and really pulled back. People that had second homes were using them. People that were doing rental arbitrage in major cities, like all of a sudden there was no demand. They pulled back. A lot of those companies went out of business. Then we saw demand recover in end of 2020 into 2021, and supply came back with a vengeance. Like 2022, supply was up 25%. And it was massive.
Wow.
It led to the falling occupancies that we've all seen from 2022 into 2023 and now to today. And along with that, we've seen sort of new growth in short-term rentals decelerate. So last year, industry was growing about 7 or 8%. Year before that, it was about 15%. And this year, we're still growing like 5%. Yes, supply growth is decelerated. You go back and look at what hotel supply growth is right now, though, it's 0.5%. So we're still 10xing the hotel industry right now in terms of overall supply growth, but it has decelerated. A lot of that, I think, has to do with the housing market and how tough it is to find profitable investments right now. I don't think that's forever. I do think there's lots of profitable investments to be making right now. I bought a house myself last summer. It's all about finding the right market and the right property to invest in. And we're still seeing, and a lot of people do great things. It's just harder to do these days than it was maybe 2 or 3 years ago.
Yeah. Wow. Obviously, the growth has subsided in a sense that's not as drastic, but when you compare it to the hotel industry, it's still a lot better. Now, considering those things, what's the idea between boutique hotels? Like, where does that fit into the equation?
Yeah. So most the growth happening right now in the hotel industry, like that 0.5%, is like branded Hilton, Marriott in top 25 cities.
Gotcha.
Like that is where so think your typical Holiday Inn Express, your Hilton
Yes.
Garden Inn, your Hampton Inn, and like Marriott's launching new brands. They're typically in the like economy to mid-scale space, and a lot of them today are actually brands that you can renovate into. Let's say you're not willing to put the money into renovating your Hampton Inn to keep up with the brand standards, but like maybe we can go with the new series brand, which is and not as nice as Hampton Inn, but like you can still get that sort of next hotels brand in the list. Boutique hotels is a really interesting middle ground between traditional hotels and short-term rentals. As
Yeah.
typically they're, and almost by definition, they're unbranded. Like you're not going with a Hilton or Marriott brand. And that allows you to do so many different things with making it a really unique experience. And what sometimes the brands do, especially for the small, unique sort of hotels, is it puts a ceiling on what you can charge. So like you go to Hilton Garden Inn and they're like, I'd never pay more than $200 to stay at a Hilton Garden Inn. But like this total unique boutique hotel that can charge $350 or $400 a night? Absolutely. And that's just like what you pay for this sort of unique experience in that market. I love the sort of boutique hotel space and love that we're seeing this merging between short-term rental investors that are looking to level themselves up.
Yeah.
Wouldn't it be great if we had 5 or 10 homes or 15 homes all right next to each other and it just make it so much easier to scale this business? But still bring in the sort of unique things that I can do, the design, the amenities. It's a boutique hotel.
That's absolutely, and I think it might be even more exciting for somebody like you that has worked cross-functionally in the hotel industry and in short-term rentals for a long time. Even in the hotel industry, you were known as a short-term rental guy. Now you're known as a short-term rental guy, but you still have influence from the hotel industry. So now you see this a baby created from this, which is the boutique hotel. Do you have any data around like what that sector is doing and how that's growing, or is that really hard to find or really hard to define?
And there's the definition of boutique hotel is a tough one because it spans the and less than 50 room economy sort of motel. Schitt's Creek. I don't know if you watched that, but like, and it's throughout the show ran the line of, is this a motel or is it like leveling up to getting to boutique hotel status? And then you get the sort of, all the way up to like the soft brands that like Hilton centric or Hyatt centric or like these boutique hotel brands that the big chains are doing. But in general, what we see is we don't see a lot of new boutique hotels being built. What we see is a lot of someone coming in to, let's say, a economy motel or hotel, renovating it, and then bringing it up to upscale luxury boutique hotel status. And that's not net new supply. That's just conversion supply.
Yeah.
And there's always a sort
It's hard to measure.
It's hard to measure. There's always a percent happening in the business of whether you're renovating down or renovating up. But in terms of how big the overall hotel industry is, like it's almost immaterial in terms of impacting the supply there.
Yeah, absolutely. So transitioning, right? So going into just short-term rentals, how obviously we've seen data, and that's the thing about data, it's really hard for people is when you look at the data, for example, for a data set like Joshua Tree, it does not look like a really good investment at all. When I'm in it and I actually live it and I see the data points, I'm looking at these average homes bringing down just a complete the ROIs of these incredible homes that are like in the data set of what works. So if you buy a neighborhood home, you're not going to do as well as if you buy a home that's surrounded by boulders and has incredible views and has the right amenities and it generates the money that you need to generate. And I'm sure there's a lot of nuances in different markets too. How do you visualize the macro data that you kind of share, and how do you really use that for your micro markets and understanding your micro markets? Yeah.
Yeah, I feel like Joshua Tree is the perfect example of being able to measure what the impact is of like the design, the amenities of a property, and those that have it and those that don't. And that you can go back, and what I love about AirDNA is like we can actually go back to 2018, 2017, like pre-COVID levels, and then see how things have changed throughout. So like you go back to 2018 and look at the performance of a property, let's just say with and without a pool, like you get a little occupancy bump for a property with a pool back in 2018, 2019.
Interesting. I
And
don't know.
then you fast forward to today, it's night and day. Like what the impact of having a pool is versus not a pool is in the Joshua Tree market. So, and we could do that for probably a handful of amenities like good design and views, things like that, where it's like the difference between the haves and the haves nots, like back in 2018, 2019 was a little bit. And now you fast forward today and it's a whole lot. So if you're just,
Why is that?
I think it's the leveling up of competition. It's a maturing of the business, and just like how popular Joshua Tree got for investment. Like you look at all the new properties that's come into that market, and it's been a really large increase in overall supply over the past like 6 years. Like going back to, let's say, 2018, there's only about 1.2 thousand listings
Wow.
or 1,200 listings in that market. Now it's up to 3,500.
Wow.
So
And that's just Joshua Tree, or is that the whole?
that's Joshua Tree, 29 Palms, like that whole
Wow.
sort of area. And yeah, when you see that much supply, and when you see like with people like you guys telling everyone, if you're a new host coming into this market, here's what you need to be doing. We've just seen every year, the new listings are just that much better. Which now, if you go back and you benchmark all those listings that have been around since 2018, 2019, that have stuck around and not upgraded their amenities, haven't invested in design, you just see their performance continue to edge down and down. So now it makes the haves look, okay, like it's still a decent market to invest in. And the have-nots, they're like, Joshua Tree's the worst. We used to do so well, and this market's just gone into the tanks. It's,
Yeah.
the market's changed and you haven't.
So that's the interesting thing is, do you think that there are other instances of that in other markets as well, like Florida markets or, I don't know, Aspen or different areas where the haves and the have-nots, this disparity between the two has just grown?
Yeah. And Gatlinburg's another great example.
Oh,
Like
yeah.
you're going to go into that market. And we call it like the amenities arms race. There really is like this arms race that's happening. Other markets, like some of the more traditional vacation rental markets, like up in the Northeast, like we haven't necessarily seen it. And the difference between the haves and the have-nots is not as disparate. So that's where, like, if I'm investing today, it's okay, like, what is the investment I'm willing to put in? If I now go into, and where you can start to uncover, like, all right, I'm going to go into a lake market in Maine, make and see what the best properties are performing at relative to the average. Oh, there's still like a big lift that I can get here by coming in and being unique versus like in a Gatlinburg where I have to be unique just to be average.
Wow.
Yeah.
That's how I feel about Joshua Tree. Is like you have to just do the most just to be on par.
Right.
Just in
And,
some places, yeah.
and those are markets that are like, if you're going into it, you should know it and make sure that's what you're willing to do. Because if you're just going to do okay in terms of, or not go all in,
Mhm.
don't go into Joshua Tree. There's a lot of other markets where you can go in and do the minimum viable product to like launch in that market and still do okay.
Yeah, absolutely. And then I'm curious, like when you level up a market, do you see trends where a market levels up and then becomes stronger in terms of numbers as a whole because of the quality that is created there? Like, I don't
Yeah.
know if there's examples of that in other markets. Like, I'm curious on your take.
I know, and that's I just pulled up Joshua Tree. Like Joshua Tree was one of the worst markets to invest 2 or 3 years ago. And after pre-COVID being one of the best, and it's back to one of the best ones. And I think it's all because
Interesting.
of like how the properties in that market have leveled up. Yeah, you look at what properties are earning relative to their home values, like it makes it look like there's a decent return. But then when you know and sure like all the additional investment you've got to make into the property over and above what the cost of the home is, that's where it starts to be a little bit disconnect between what our sort of investment score is and then what the actual investment opportunity actually is. And Gothenburg's showing that way now too. It looks like it's a great market and there's lots of opportunities there, but you just have to know 50th, 75th percentile is it's a really good property.
Yeah. Yeah. And it's like people, it's interesting. People come to me all the time. They're like, oh, wow, I have this luxury property. I look at it, I'm like, this is middle of the pack. But it's just something that I can't obviously tell somebody because they think their property is luxury. And it is in another market. If you plop that in Michigan, it'd be amazing. It'd probably do really well, or Kentucky or something like that. Bash on Michigan, I think, too much. I think they're leveling up out there. So I'm going to leave them be.
But that's Midwest. Yeah, there's some leveling up happen, but there's also a lot of opportunities where if you don't want to go all in, like you can still make a decent return because the competition hasn't leveled up across the board there.
Yeah. Let me ask you this, because I think this is a really interesting topic that I've debated people on. What do you think about the idea of group travel? And this is something that I come from the days of Avance, right? I was there at the start of Avance. There's
Yeah.
a lot of other companies that have taken that inspiration and have built it in their own brands, especially as managers or whatever. And they've really honed in on the group travel, the big groups. Like, this is really where we differentiate. But then there's also a lot of people that are like, there's a lot more flexibility and it's more ease of clientele and less wear and tear when you go into like the 1, 2 bedrooms. But then the pros and cons and the debate is what's better? Is it better to go big or is it better to go smaller? If you go big, there's more wear and tear. There's people that have to like even like paint their walls like once a quarter because it just gets dinged up so much
Yeah.
or that kind of thing versus the smaller ones. Now you're competing with hotels and that's
Yeah.
like a replacement product of a hotel, but it's better in some way. So I'm just curious, like, what's your take on that kind of argument that's there, that's existent?
Yeah, I'll precede you with my answer of the property I invested in last year is a 5 bedroom property. So I analyzed all the data trying to get a sense of like where is the industry going? And in my view, it's like towards the larger properties that sort of can accommodate group travel. If you look at the average listing and like number of bedroom nights sold, back in 2016, it was 1.5.
Hmm.
Now it's 2.5.
Wow.
So we've seen, and just the average listing that someone is booking has gotten bigger. If you just look at data over the past year, like I said, averaging out, we're seeing about 6, 7% growth. Like 1 bedroom units saw demand go up about 4.5%. 5 bedroom units saw demand go up 12% last year.
Holy moly.
And like where short-term rentals have really been beating hotels, and I
Yeah.
still see this as competition with hotels because still and
Yeah.
7 out of 8 room nights are being sold in a hotel and not a short-term rental. Like
Mhm.
we only have 15% demand short right now. Like it's relatively low compared to overall hotels. And like where short-term rentals are winning, it's in coastal, mountain, beach, rural locations where there's not a lot of hotel competition, and in the larger listings where people are seeing that arguably the product is better on a short-term rental compared to a hotel. And like hotels have a lot of things going for them. Like you have all these amenities right on site. You have 24-hour staff, you have room service, you have all the ability to provide these services on property. Like hotels are arguably a better product in urban areas for shorter stays, less than 3 nights, and for when you're traveling with 3 or less people. So would I want to go in and start investing in a whole bunch of properties that are competing directly with hotels? Like I'd much rather just go buy a hotel.
Yeah.
Then if I'm going to be betting long term on where short term rentals are it's going to win, show me the type of properties that beat hotels based on the product and the service that's offered.
Five plus bedrooms, right?
Yeah.
Or 4 or 5 bigger groups.
Yep.
So the middle ground, I think the awkward place is like the 3 bedrooms where you're in between the smaller group kind of place. Curious, what about like boutique hotel buyouts? That's been really popular recently. I know in Palm Springs, there's a lot of people that will do like a 8-unit hotel, 10-unit hotel, and they'll do buyouts on weekends a lot where all their friends will come out, and that's killer. The numbers they're getting on that is absolutely insane.
Yeah, there's just, how much opportunity does that actually provide of like, how many boutique hotels are there actually in Palm Springs compared to all the short-term rentals? And yeah, for an event, like getting 8 hotel rooms and you can rent out the whole property, that's great. It actually typically provides more, and that's like a bigger group than you could put into even 3 or 4 short-term rentals, unless you're just getting a monster property. So it's all, there's different types of properties that are going to accommodate different types of groups. Is understanding like what are the level, what is the amount of demand for these groups, and how am I going to go in and be attractive to those type of groups? Like, yeah, there's going to be small wedding groups coming into Palm Springs all the time from LA, and those are supportive. We see those like super popular, like in the Hamptons market too, away from New York. If you're near one of those big metros where you can have the sort of high net worth individuals doing things like that, like absolutely. Is that going to work? Like I'm in Atlanta, like an hour outside of Atlanta, like it does in LA? Probably not. Yeah.
Gotcha. Interesting. Now let's talk about the outliers. Let's talk about the 8, 9, 10 bedrooms / maybe 30 sleeps 20, sleeps 30, like those kind of homes that the super niche.
Yeah.
I'm curious if they do better or worse than like a 5-bedroom per door, like when you pay for that kind of thing. So I'm just curious, does that make a difference? Like a 12-bedroom, like lakefront house versus a 5-bedroom, like cost per dollar or revenue or whatever, the ROI per dollar spent on that.
It really depends. Like with those type of properties, you're definitely getting lower occupancy.
Yeah,
like
for
you're
sure.
getting people renting out a 12-bedroom home for 2 weeks or a week. It's typically like family reunions, 3, 4 nights. So you're running overall lower occupancies. Yes, you're getting astronomical ADRs, but there it also becomes, if you're really going to drive profitability in those properties, like what are all the additional services you can then be offering for those groups? As a typical wedding venue, you're not making your money off of renting it for the night of the wedding. You're making your money and your profit off of all the additional services you're then offering those groups of when they're using your property. So it really becomes like an event space that you're managing, less than a short-term rental that you're offering, if you really want to drive profitability. And then, so can you offer private chefs where you're getting a cut of that? Can you offer big experiences? Can you partner with a wedding venue? All those sort of things are what really make that a hospitality business and not just a short-term rental.
Gotcha. And in those, do you know the like revenue split of how much money people make in auxiliary services or concierge or something like that versus the actual rental revenue that comes in?
Yeah, I won't give you a data on that because I don't know it, but I'll give you an example
Yeah.
for like a resort hotel, which
Mhm.
is maybe more comparable. A resort hotel is generating 50% of its revenue from auxiliary services like
Wow.
F&B, spa, massage, things like that. So only 50% is coming from the room rental rate. So, like with Airbnb's sort of launch into services,
Mm.
like I met with the team out in LA and like
Yeah.
they were quoting that stat to me and I had it quote back to them and they're like, yeah, and all these resort hotels, 50% of revenue is coming from other revenue. And like we want a piece of that to continue to grow our business in the US and some of our other core countries. And like our hosts today mostly are not offering or not able to offer those services. So our ability to connect these service providers in with the guests that are staying in with these properties, and we know the guests because they survey them. A lot of the reasons why they say they're not staying in a hotel or staying in a short-term rental is because the short-term rentals don't offer those services.
Mm.
So how can Airbnb continue to take share back from the hotel industry and grow their revenue at the same time? And hence and their launch of services.
Do you think that hotels and short-term rentals will ever be allies? Or do you think we'll always go at bat with each other? Because it seems like we're just trying to take market share from each other. How about growth?
Yeah, I think the question differs on whether because there's three major like players in a hotel, right? You've got the brand like Marriott, which all they're doing is like marketing. They're like an OTA like Airbnb. In Marriott, like, and they've got Marriott Homes and Villas, so they're willing to market short-term rentals just like they are a hotel. Then you have the management companies that are actually like on the ground, like managing the properties, cleaning the rooms, like managing the day to day. And I suspect that those hotel management companies are like the perfect group to get into short-term rental management too and build scaled management. Because essentially all Vacasa and like an Avant Stay is like a scaled management company. Like they haven't built national brands like a Marriott or a Hilton. All they're trying to do is really scale and managing and turning over and pricing all these properties at a bigger sort of scaled basis. And then you've
Okay.
got the hotel ownership groups. And those are the ones that are actually bringing the profit down to the bottom line. Those are the ones that own the property. So they're the ones that are really, I think, ultimately competing with short-term rental owners of I want to pull in guests to my property versus yours. And that's where I see the real competition between. I think the brands and the management companies will take their skills to and whoever's willing to pay their fee. And I could see them like really starting to blend their business models between hotels and short-term rentals.
So you're saying the management companies. Curious, because obviously there's a service, right? The management part, but then there's the brand, and there's a lot of management companies or co-hosts or all these people that are operating in these markets, but the brand is never national. It's never that strong nationally. Maybe it's like very strong locally.
Yep.
And there's a lot of what's that word for it? There's a lot of segmentation. Is that how you say it? A lot of segmentation in our industry where
Yep.
there's really not them a core management company other than Vacasa, but there's 1.5 million short-term rentals in the United States, and Vacasa has 40,000, which is only 2.7% of the
Yep.
total market share. So that's like very segmented. And considering that there's no big brand, and now I see what Casago is doing, and it makes me think. It made me a light bulb just right now went off, Jamie. Is that Casago becoming a Marriott?
Yes. And that's what I think. Like Casago is essentially
With
saying
T.
we're not going to try to scale management at the brand. We're going to try to scale a brand and get good at what a Marriott type company would do of create standards, allow national marketing campaigns, but every market is essentially going to be its own ownership or management company.
Yeah.
So the local franchisees are the management companies. You've got the homeowners, which are like the hotel owners, and then you got Casago acting as the sort of national hotel brand. And that sort of split, and we've seen actually work in the hotel industry. We haven't seen work in 50 years like a scaled management brand in the hotel space. There's a lot of new brands that launch do management themselves. So one of my favorites was Citizen M, like super cool, hip hotel launching a lot of global cities. Like they did, and they built the brand and they managed the properties, but that only scales so much
Yeah.
until you've got to and break it out. And like Marriott, when it started, it was the owner, it was the manager, and it was the brand. And now you've got the ownership that got split off into host hotels. You've got the management companies like Aimbridge, White Lodging, and then you've got the brand. And the brand is, and arguably the most profitable piece of the business because they're able to, and it's asset light. They don't have a large number of employees. They don't have they don't have the sort of capital expenditures to buy the building. Like essentially they're just out there collecting the royalty fees and marketing the company.
So the brand is obviously the winner in this one because of the light overhead, high profit margin kind of business versus the intense boots on the ground property management stuff is tough.
Property management's hard.
It's very tough. And so now, even as a operator right now, operating so many short-term rentals in one market is hard enough. I can't imagine the scalability of 50, 100 markets like Avance is doing, or like Casago, they're doing in a good way, like Vacasa or Evolve. So it's like really hard to scale that. It makes sense. Now, where do you see that heading? Like, what do you think would be the most, if you were to start a management company, just knowing the data you know now, what do you think would be the best way to grow and scale a management company?
Yeah. And I talk with a lot of property managers on a day-to-day basis. And I would start in a single market, and I would build all my systems in that market. And what I've heard some of the larger players say, and I've seen in real time, like when you add additional markets, it doesn't increase the complexity 1x. It 2x's the complexity. Thinking that, okay, I did it good in my market, now I can scale that to another market. Like it's going to make the running that business exponentially harder the more and more markets that you go to. So figuring out how to build a scaled profitable property management company in single market is, I think, the first step. Then it's figuring out what works. Like, what are the type of properties that are profitable? What are the type of properties that are unprofitable? I'm segmenting your market in terms of making sure you can scale it in a profitable way of, okay, you've figured out now what are the type of units, what are the type of homeowners that you want to bring on? And like, how can you market and bring those on efficiently and effectively? And then once you build that process where now like you could scale to the level that maybe your market supports, now you've got to go think about that next market. And with knowing that what worked in one market isn't going to work in the next, but now you've got the sort of system in place to analyze the data and figure out like how to move in that market and scale it effectively. Gotcha. And if you don't go through that step-by-step process and you try to maybe grow too fast and scale too fast, then and you're going to get yourself into trouble, which we've seen happen all too often.
Gotcha. So you'd be scale responsibly, figure out what unit counts work, and then just go after those kind of units. Okay. Now, in terms of like investing, what kind of, as an investor, what kind of asset, obviously you said 5 bedrooms work really well.
That was the market I looked at. Yeah. And that's not going to be the same in every market. Absolutely.
For sure. But let's say you're going through just an analysis of the whole short-term rental industry as a whole in the United States. How are we comparing right now compared to Europe, or that was a more mature vacation rental market, or other areas where travel has been around for way longer as a short-term rental industry?
Yeah. And one thing in Europe, Europe saw a very different recovery coming out of COVID.
Okay.
So in Europe, demand did not come back quickly like it did in the US. Like lockdowns were around for a while and social distancing was And even throughout 2022 into 2023, like it took till 2024 for demand to fully recover back to 2019 levels, where in the US, it was like summer of 2021. So the whole recovery factor like just took longer, which meant you didn't see the supply rebound like we saw in the US, like where it was growing 25%. Like we only got up at its peak like 15% Europe, which actually matched really well with demand. So we didn't see this boom bust in terms of occupancy go up and occupancy come back down. It's been a gradual sort of recovery in occupancy, which has made it a very sort of healthy investment market to go into. So we're still seeing a pretty strong growth in supply in Europe, even though the headlines might make you scared of like 65,000 listings being removed in Spain or listings being banned in Amsterdam or Berlin. Like Europe is growing significantly faster in terms of overall listing counts at a significantly higher base. There's only over 3.5 million listings in Europe, where when you said about 1.5 million in the US, like short-term rental industry is booming. And the other sort of difference is like in the US, we're all dependent on Airbnb as our major demand channel. In Europe, it's very evenly split between Airbnb and Booking.com. So it does allow you to vary your mix, drive direct bookings, and not be as dependent on any one channel. Like we see much, I would say, healthier businesses in a lot of ways in Europe. And also
competition's healthy.
Investment in Europe is pretty healthy right now. There's also this interesting dynamic of falling populations in many European countries, which you think about with how high home values have been pushed in the US. A lot of that has been with how much our population has grown and how little our housing supply has grown in subsequent. You go into Italy and Spain and some of these other areas like outside of the major cities, home values haven't been appreciating like they have. So like you can actually find decent investment opportunities around where they're much harder to find in the US.
Interesting. Now, let's say we're going back to what we can learn from Europe and in the United States, right? This, at least for my market, I don't know if this is across the United States. Maybe you can tell me a little bit better. What is the segmentation of platforms in the United States?
So for
Airbnb versus Booking.com versus Vrbo.
Yeah. So I'll say like for the entire industry, not just property managers.
Yeah.
A typical property manager is going to have, let's say, anywhere from 30 to 50% being direct. The average host out there just doesn't have that, right? They're not using a property management system. They're relying maybe on Airbnb solely, or maybe Airbnb and Vrbo to drive their incremental bookings. So when you look at industry overall, it's 70% Airbnb, like 15% Vrbo, and then you've got maybe another 10% direct and 5% or even less through Booking.com, though Booking.com has been growing pretty significantly.
So one more time, 5% or less for Booking.com. Vrbo is how much?
Like 10.
10, so that's 15. And so you're saying the rest is Airbnb, so 85%?
15% direct and then 70% Airbnb.
So 70% is, okay, I got it.
Yeah.
So 70% Airbnb. Now going to Europe, where it's more evenly split.
Yeah.
Now, obviously you guys are partners with Airbnb and you guys have a good relationship. I'm not crapping on Airbnb by any means. I'm just trying to think of this from a holistic standpoint. It could have been Booking.com, it could have been whatever. When one company dominates an area, that dependency happens on that company, right? Where 70% of your income comes from that company. Does that impact like profitability? Does that impact how you do in general? Is there any ramifications of that? Is there something that we can learn from Europe? Curious if Booking.com even is going to get more market share, or is that something that it's in their plans? Like, this is just an interesting landscape to look at.
And Booking is pushing heavily into the US. So I listen to their earnings call every quarter,
Yeah.
And their CEO, Glenn Fogel, he's a funny guy, very, very colorful. And a couple of years ago, they had this approach of we're going to go into the US hard, we're going to take our playbook, and we're going to invest heavily into the US. And then like late last year, we failed. Like our playbook that worked in the US did not work that worked in Europe did not work in the US. So what we're going to do is we're going to write a new playbook. Our entire strategy is going to be USA first, and then we'll figure out what works in Europe. So they are turning their company from like that sort of grew up and is dominant in Europe to our future is growing in the US, and that is going to be our sole focus of
Interesting.
how do we, and it's almost like Airbnb now is like almost like entirely app focused. Like they almost only care, and it's 60% of bookings now come through their app. Like booking has gone, like we are focusing on the US, we are going to grow there. They focus initially on large property managers. They're pushing now through some of the smaller PMSs to onboard and incent people to come on. And like they're trying to figure out how to get the average host onto their platform, which and is a tall order given that most hosts are solely on Airbnb. They don't use a PMS, and actually connecting multiple channels is a tough sell. And that's part of like at AirDNA, we bought a PMS uplisting about a year and a half ago. And like where we're like all in of we think PMSs and multi-channel, we think multi-channel is the future of the industry, and people are going to need an easy, lightweight, simple PMS to use. And that's what we're trying to make uplisting be. And I think a decent part of that is going to be like hosts that are on Airbnb. I need to get on Vrbo and Booking. And like, how do I do it and not, one, break my pocketbook, and two, have it be so complicated that I now don't want to do this as a business.
Yeah, absolutely. That's so true, because I don't want to bash on booking.com too much, but I've seen improvements. That's what I will say, that I've seen a lot of improvements. I'm going to do a more positive light on it, but it's been really tough to get a lot of listings on booking.com. The booking.com payments was a godsend. Thankfully that came through, and it's been really helpful for us. But before, people were like booking and then just showing up, like not paying and showing up. Like it was crazy. So I think the easier they make the platform, I think it's only going to help the whole industry. I'm excited, but I think that's the ease of use has been something that I think a lot of property management softwares and the industry is heading towards, because there's a lot of complexity in our industry at first. I'm excited for that.
Me too. I think diversification is good. Like you look at the hotel industry, and not to like keep harping on that, average hotels like listed on what, like 200 different channels.
That's true.
And their brand channels usually one of the most important. The reliance on OTAs can be maybe a bit too heavy, and they all want to drive direct bookings. But if any one channel went away, like no hotel would go out of business. If any one channel went away for that average short-term rental operator, they probably would go out of business.
Yeah, like Airbnb, I'm very heavily dependent on Airbnb, almost to a fault, which can be tough. And it's interesting in my market, because people will stay with us multiple times, but they don't want to book direct.
Yeah.
It's crazy to me. So we've been working on that very hard.
Yeah, they've done a great job of building trust with their user base. Like you see, and one of the things that to track is repeat guest bookings through Airbnb and like across the platform. And like we talk about super hosts and like they've got the designation, but the super guests that are just like using that platform 4, 5, 10 times a year is like massive. Like
the value of that customer is probably insane. The lifetime value is absolutely
and a big reason why they haven't launched a loyalty program is their customers are already so loyal. They don't need to have a loyalty program. So all their hosts, or vast majority, are only on the platform. A lot of their guests only use their platform to book. So by creating a loyalty program, all they'd be doing is devaluing what they already have, because they'd be giving away all these rewards to users that would use the platform no matter what. Like in the hotel industry, you use loyalty to drive people to book through your channel, and Airbnb just doesn't need to do that.
Speaking of loyalty, what do you think about Journey? Have you seen what they were doing?
I have. It's exciting to see someone trying to build loyalty in our business.
Yeah,
We
agreed.
saw Vrbo launch One Key, or Expedia launch One Key with Vrbo last year.
Yeah.
I think, I mean, what we saw out of Vrbo is going to be maybe a cautionary tale for Journey as well, of so much of short-term rental bookings, especially for traditional sort of beach mountain markets, is someone booking 1 or 2 trips a year, and they don't have a lot of loyalty in terms of what platform they're doing that on. There's
Yeah.
like,
Versus like a business traveler on a
right,
hotel industry is a completely different person.
yeah, where you're traveling regularly, you want to actually build up points. So
Yeah.
can you build loyalty out of a leisure traveler? Like, we haven't actually seen that happen in the past.
Wow, that's so interesting. I didn't even think of it that way, but that is so true. And even in the airline industry, they really focus on they build their whole pricing model around business travelers. Like how can we price this so that business, and then they fill the seats with leisure travelers.
Yeah.
But business travelers are their core product, like product marketing is there. So I thought that was really interesting.
Yeah, and you see it, and Airbnb does have a loyalty program through Hotel Tonight. So you
Yeah.
book hotels through Hotel Tonight, you earn 10% for your stays on Airbnb. Similarly, like Expedia, you book your hotels on hotel.com and then you can use your points on Vrbo. Like Marriott, you can book your hotels through Marriott and then use your points through Marriott Homes and Villas. Like, there are 3 great examples of loyalty programs that sort of combine the consistency of booking hotels with the need or want to book your leisure trips with those points.
So the cross-functional use. But
Yep.
yeah, if the average person, like, how often does their average person travel?
So the average person travels 1 or 2 times a year.
So at that point, can you build loyalty with a leisure traveler like that and into one of these markets? That's tough. I don't know. I'm excited to see them take it on. I'm all for it. I'm part of their launch program, so I'm all ears and all for that kind of stuff. But it'd be interesting. It's an interesting problem to solve for sure. Jamie, I just kind of want to get into the last 3 questions and close this out, man. It's been awesome talking to you. I love talking to somebody like you because it's super analytical and it's actually looking at things at a macro and micro levels. Appreciate that, man. But last 3 questions. First one, I'm just going to ask educational resource. What educational resource do you think is instrumental for, you can say AirDNA if you want. I was going to say, I don't know.
I'll give the free ones that we have. We write a blog. We do an update on US and European performance every month. We call it our US and European reviews. Like, it's free on the blog. If you sign up to our newsletter, you get it in your inbox. Like, I highly suggest listeners just regular read that to just get a pulse of what's happening across the industry. It's going to make you smarter. Even taking the text out of that, like having ChatGPT summarize it and then sending it to your homeowners, if you're running a co-hosting program, like, that's going to make you look smart by just taking the work we've done and putting it out and giving them an update on what's happening across the industry. And then I've got a podcast I do weekly on sort of short-term rental performance. And that's a great way if you like to keep updated with the data, but you don't like to read and you just want to listen.
So what's the podcast name? Drop it.
The STR Data Lab.
There you go. And I actually listened to it too, so highly recommend. Cool. And then second question, this is a special question for everybody. I like to put out a scenario, and I think your scenario happened, but based on all the data and everything you have, but now add unlimited budget, what kind of project would you do what kind of project would you do? Where would you buy this project? How would it look like? How many bedrooms? How many unit counts? What's the goal with it? Let's just say you don't have a limit on capital.
Yeah. I would want to build what I think would be fun. And it goes back in terms of, and I've pitched this on my wife, she said no so far, blending boutique hotels and short-term rentals. Like, I feel like going to a market where you could buy a boutique hotel, have the sort of scaled hospitality business, and then use that property to then launch your short-term rental management company in that. So your boutique hotel becomes the sort of central sort of location. It gives you central laundry, gives you shared staff that you can use across the hotel and short-term rentals. and then and use that to build a profitable short-term rental management company, and then probably use a slap Cago franchise on it and not try to build my own brand, but leverage the brand building work from others.
Jamie, now the question becomes, do you think you're going to pass all of the tests that Steve Schwab has for all of his franchisees? Making sure
Only after going to Cago University.
There you go. There you go. Cool. Yeah, I actually really like that idea. I might steal it. Okay, so last question. What does the future look like for you and just AirDNA in general?
Yeah.
Because I know you guys have exciting things in the pipeline.
Yeah, so we've been going a few different ways. I started working probably pretty heavily on the product about a year and a half ago. And we've made some really big updates. One a few weeks ago on Rentalizer.
By the way, before you go, I know you're getting to it. There was not a lot of updates for a while. I feel like this has been the year for you guys. You guys are really pushing a lot of new products, updates. Obviously, the core product has been transformed, but you guys haven't launched new products either. So I'm really excited to hear. Anyways, go on.
Yeah, and we've been listening to customers. We've been talking with them, trying to get a sense of what would really help them. And so like rebuilding Rentalizer essentially from the ground up, allowing you to customize properties that are going into it, sort of build your own estimates off of the data. Like we've seen our core and value attribute as a company is the data. So I manage our data science team. We put a lot of time, effort, expense into getting the industry's best data. And now we need to put that data in the hands of users. And a lot of the users, and they know how to use the data, they know how to analyze it, and you just need to create the tools that let them do what they want to do. So that on Rentalizer, couldn't be more excited about it. And the number of people that have been using it, customizing, generating reports of it has been outstanding in the feedback we've gotten.
That's exactly what we were talking about in the beginning of this episode, even just Joshua Tree as alone. Let's say you're looking to invest in Joshua Tree and it looks like a crap market from a macro level maybe, but then you dive into it and you're like, wait, hold on. If I take these comps, they all have these things with the pool. Let's say all of them have pools, all of them have the specific area, whatever. Wow, actually this ROI is there. Yep. So I think that's going to be really, I can't wait to play around with it too.
Yeah. And then some of the things upcoming is we're building better tools for property managers. So we launched our sort of advanced tier, and now we're going to be going really into what do you need to actually scale your company? What is the information to find out what are the profitable properties within your portfolio? What are the best performing? What are the ones that guests like the most? What are the factors that are leading to the better performance, sort of what we were talking about in terms of analyzing your business? We want to provide those tools for you. And then the ability to analyze all the other property managers in your market. What are they doing? What are their most profitable listings? What are their best performing ones? So you can go out and try to replicate. We don't need to reinvent the wheel here. We need to see what's working, be able to analyze that quickly, and then test and bring that into the market. Really excited about the tools that we have coming out. Yeah.
Dude, I'm the property manager tool. That's legit. I don't want to spoil too much. I don't know can I talk a little bit about it?
Yeah.
Yeah. I did a demo just recently, and even the reviews, just being able to see the reviews coming in, and I can eventually segment those and see per property manager how their reviews have been, or per cleaners how their reviews have been. Yeah. I think that's just really cool because now we can see how the whole how we're doing. Really pumped for that, man. Anyways, thanks so much for hopping on and just sharing everything you guys are doing and just sharing just data insights as always. But I feel hopefully this was a little bit more fun than just sharing data the whole time and actually giving your opinion on things. I loved hearing kind of the insights on what you think is trending, but also what personally you think is happening with the industry. So thank you for all that, man. And you're just awesome. I appreciate everything you do for this industry. So thanks for hopping on, man.
No, thanks for having me. It was fun. Great questions.
And that's a wrap. Thank you for listening to the Patrick Real Estate Show. If you found this episode helpful, please give us a follow and leave us a 5-star review. Your support truly means a lot. And connect with Patrick in the show notes below. Until next time.